Short-term finance. It's about managing your money in the here and now. Whether you're a student or a small business owner, understanding short-term finance is crucial. It's about having enough cash to cover your immediate expenses. Making smart decisions today secures a brighter tomorrow. Think of it like juggling. Bills to pay, money coming in, and extra cash to grow. Mastering short-term finance means keeping all those balls in the air. It's about having cash when you need it and making your money work for you. This isn't just about numbers, it's about peace of mind. Knowing you can handle whatever life throws your way. Whether it's an unexpected car repair or a sudden business opportunity, having a handle on your short-term finances can make all the difference. In the following sections, we'll break down the key elements of short-term finance. By the end, you'll have the knowledge and confidence to take control of your finances. So, let's dive in. Cash flow is the lifeblood of any financial plan, whether you're an individual or a business. It's the steady stream of money coming in and going out. Effective cash management ensures you have enough cash on hand to cover your expenses and seize opportunities. Start by creating a budget. Track your income and expenses. Identify areas to cut back and save. Forecast your cash flow. Anticipate your income and expenses. Build a cash buffer. Aim for 3 to 6 months worth of living expenses. Don't let excess cash sit idle. Explore short-term investments. Take control of your finances to achieve your goals. Short-term investments are like parking your money in a safe place where it can earn some interest before you need it again. These investments typically have maturities ranging from a few weeks to a year. They offer a balance of liquidity and return, making them ideal for short-term financial goals. Several options are available, each with its own risk and return profile. High-yield savings accounts offer higher interest rates than traditional savings accounts. Money market accounts provide check-writing privileges and competitive interest rates. Certificates of deposit offer fixed interest rates for a set period, providing predictable returns. For those comfortable with slightly higher risk, short-term government bonds and commercial paper offer potentially higher returns. Government bonds are considered very safe, while commercial paper carries slightly more risk but may offer better yields. The key is to choose investments that align with your risk tolerance, time horizon, and financial goals. Short-term debt includes any borrowing you need to repay within a year. This can range from credit card balances to short-term loans. While debt can be a useful tool, it's crucial to manage it carefully to avoid falling into a debt spiral. The first step is understanding the terms of your debt. Know the interest rates, fees, and repayment schedule. Prioritize high-interest debt like credit cards as they can quickly erode your finances. Making even small, consistent payments on high-interest debt can make a significant difference over time. Avoid late payments like the plague. Late fees and penalties can add up quickly and damage your credit score. If you're struggling, contact your creditors to explore options like payment plans or hardship programs. Used strategically, short-term debt can help you bridge temporary cash flow gaps or fund investments. However, remember to borrow responsibly and have a plan for repayment. Section 5. Keeping your business afloat. Working capital for small businesses. Working capital management is the lifeblood of any small business. It's about ensuring you have enough cash flowing through your business to cover your day-to-day operations and meet your short-term financial obligations. Effective working capital management is crucial for maintaining liquidity, profitability, and a healthy financial position. Optimizing your inventory is key. Too much inventory ties up cash, while too little can lead to lost sales. Implement inventory management techniques to find the right balance. Managing accounts receivable efficiently is essential. Establish clear credit policies, invoice promptly, and follow up on overdue payments to keep cash flowing. Negotiate favorable terms with your suppliers. Longer payment terms can free up cash, while early payment discounts can save you money. Balancing your short-term financing needs effectively is crucial. Explore options like lines of credit, short-term loans, or invoice financing to bridge gaps in cash flow while seizing growth opportunities. Section 6. The Balancing Act: Liquidity, Profitability, and Risk. Mastering short-term finance is a balancing act between liquidity, profitability, and risk. Liquidity refers to having enough cash on hand to meet your short-term obligations. Profitability is about generating more income than expenses, while risk involves the potential for loss. Finding the right balance is crucial. Holding too much cash ensures liquidity but limits profitability. Taking on too much risk can lead to higher returns but increases the potential for losses. Effective short-term financial management involves finding the sweet spot that aligns with your financial goals and risk tolerance. This requires careful planning, monitoring, and adjusting your strategies. Regularly review your budget, cash flow forecast, and investment portfolio. Make necessary adjustments based on your changing financial situation and market conditions. Remember, short-term financial management is an ongoing process, not a one-time event. Section 7. Budgeting Basics. Taking control of your cash flow. Creating a budget doesn't have to be a daunting task. Start by tracking your income and expenses for a month. This will give you a clear picture of where your money is going. Distinguish between needs and wants. Needs are essential expenses like housing, food, and utilities. Wants are things you'd like to have but don't necessarily need, like entertainment or dining out. Set realistic financial goals. Whether saving for a down payment, paying off debt, or investing, having clear goals will keep you motivated. Explore budgeting methods like the 50-30-20 rule, where 50% of your income goes towards needs, 30% towards wants, and 20% towards savings and debt repayment. Once you have a budget, track your progress regularly. Adjust as needed based on changes in your income or expenses. Remember, a budget is a living document that should evolve with your financial situation. The key is to be consistent and disciplined in your approach. Section 8. Short-term investment strategies. Picking the right fit. Choosing the right short-term investments depends on your individual needs and risk tolerance. Assess your time horizon. How soon will you need access to the funds? If you need the money within a few months, a high-yield savings account or money market account might be suitable. If you have a longer time horizon, a CD could offer higher returns. Consider your risk appetite. Are you comfortable with the possibility of fluctuations in value, or do you prefer a guaranteed return? If you're risk-averse, stick with FDIC-insured options like savings accounts and CDs. If you're willing to take on some risk for potentially higher returns, explore short-term bond funds or money market funds. Diversify your investments. Don't put all your eggs in one basket. Spread your money across different asset classes to minimize risk. Consult with a financial advisor. A professional can help you create a personalized, short-term investment strategy that aligns with your financial goals and risk tolerance. Section 9. Debt Management Tips. Staying ahead of the game. Managing debt effectively is crucial for achieving financial stability. Create a debt repayment plan. List all your debts, including interest rates and minimum payments. Prioritize high-interest debt first. Focus on paying down the debt with the highest interest rate while making minimum payments on others. Consider debt consolidation. If you have multiple high-interest debts, consolidating them into a single loan with a lower interest rate can save you money and simplify payments. Negotiate with creditors. If you're struggling to make payments, contact your creditors and explain your situation. They may be willing to work with you to create a payment plan or temporarily reduce your interest rate. Avoid taking on new debt while paying down existing debt. This will help you get out of debt faster and avoid digging yourself deeper into a hole. Remember, managing debt is about taking control of your finances and building a more secure future. Section 10. Working Capital Optimization. Strategies for small businesses. Optimizing your working capital is essential for maintaining a healthy cash flow in your small business. Improve your inventory turnover. Analyze your sales data to identify slow-moving items and adjust your ordering practices. Implement just-in-time inventory management to reduce storage costs and minimize waste. Speed up your accounts receivable collection. Offer early payment discounts to incentivize customers to pay promptly. Implement a system for tracking invoices and following up on overdue payments. Consider using invoice financing to access cash tied up in unpaid invoices. Negotiate favorable payment terms with your suppliers. Request extended payment terms to improve your cash flow. Explore early payment discounts to reduce your costs. Consider using a business credit card to manage short-term expenses and earn rewards. Section 11. The last word: mastering short-term finance. Mastering short-term finance is an ongoing journey, not a destination. By understanding the principles of cash management, short-term investments, and debt management, you can take control of your finances and achieve your financial goals. Remember that knowledge is power. The more you understand about your finances, the better equipped you'll be to make informed decisions. Don't be afraid to seek help. If you're struggling to manage your finances or need guidance, don't hesitate to reach out to a financial advisor. They can provide personalized advice and support to help you succeed. Start today. The best time to take control of your finances was yesterday. The second best time is now. Make a plan, stay disciplined, and watch your financial well-being flourish.